Alright guys, welcome back to the channel. Let's talk about why AMC as well as the broad markets could see a substantial rally, considering on Friday, yesterday, we just broke under 20% down on the S&P into official bear market territory, down over 31% on the Nasdaq, and then we've seen a very violent end of the day recovery and actually closed slightly positive on the S&P, the Nasdaq almost clawing back a 2.5% drop intraday to almost go positive. They did close down 0.30%, but overall an incredible rally that we've seen. We need to talk about that, specifically AMC stock as well, because this executive order is coming closer and closer and closer, and I do think history will repeat itself, and that means we should start to see pretty big rallies this upcoming week. We have a lot of data that we also need to go over, and that is the reason why I think the markets might actually, quote unquote, go crazy, or at least see a substantial bounce from here. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the pinned comment to do so for that. And make sure to get yourself those free stocks with Webull, Moomoo, and Public down below in the description. Right now, if you have not signed up with all three of those, that is the single best thing you guys could do right now to get yourself some free shares and to just put money in multiple different places. You always want to have different brokerages that you can trade on if you needed to, and you can always sell your free stocks and take that to cash and make trades if you want to. You can do a lot with that, but nonetheless, let's get into exactly why I think AMC as well as the broad markets are going to rally this upcoming week. Now, it comes down to Friday, what happened on Friday, and that's going to be very obvious, right? We fell 20%, almost 21% intraday, down to 380.54, and we've seen a sharp market rebound. We did not get any news to cause this market rebound, but what happens historically when you hit 20% down on the S&P and people start officially calling it a bear market, if there isn't really any relevant bad news besides what we've already known about, right? Like the Fed raising rates, energy prices, Russia, Ukraine, China, supply chains, inflation. We know about that. So it's not like brand new. We know about that. We kind of know what to expect to a certain degree. But when the markets hit that 20% bear market, as long as there is not any bad news that came out the day of, right, or any really bad news that came out in the last couple of days, then you do tend to see a new dynamic start to form in the markets. They start to say, hey, should the S&P really be down 20%? Is this really granite, given that we kind of already know what to expect and we've priced in a lot of bad news already? That's kind of the mindset that starts to take over when the S&P goes into an official bear market. So in a weird way, it's kind of support as long as you don't have a very relevant bad news catalyst. We did not get Fed Jerome Powell today. We did not get any bad news today. So you did see that bounce. Now we do get Fed Jerome Powell this upcoming week. We do get the FOMC report. We do get consumer data. We do get the GDP numbers, which that could alter this situation, and it could be bad, yes, but the markets at this point are firmly pricing in a Fed-induced recession. They're firmly pricing in growth to slow down in a very substantial way, for profits to take a massive hit, and for inflation to last years. To a certain degree, they're also pricing in the war in Ukraine to last years, high energy prices for years, the COVID China lockdown to at least last 6 months from now. The markets are pricing in a lot of bad news. That is why the Nasdaq has officially dropped more now than during the crash of 2020. But there's been a lot more pain this time around because it's been a slower downtrend, right? 6 months in the Nasdaq to go down just almost every single week. Now down 7 weeks in a row. You literally have to go back to 2002 to get 7 weeks in the S&P and the Nasdaq that closed red. That's not even 2008 financial crisis. That's the dot-com bubble. You got to go back a long time to put that into context what is going on. But you've dropped 31% peak to trough now, and you only dropped about 30% peak to trough in the Nasdaq during a 100-year pandemic during the good old Rona. So you've seen a lot of pain already. There's been a lot of pricing in of bad news. And the thing that we really have not gotten in the past 6 months is good news. So if we start to get any degree of good news, whether it's not even a big deal, maybe it is a big deal, but you don't even need a big, good news point to come out. You just need something. Everything has been so bad that there has not been a reason to buy the dip. The Fed is not your friend after all. That's why you have not seen a V-shaped recovery. Fed is not stepping in. They're not going to save the day. So don't expect to see a V-shaped recovery. But if you do get good news, we could rally quite substantially here in the broad markets. Now, for AMC's sake, you do have the executive order, which is coming up, which we've talked about this many times, so I don't want to get into it too much, but it's executive order 14032. Long story short, it says, hey, hedge funds, you can no longer use Chinese securities as collateral to service margin calls or to prop up your portfolio with all of these Chinese securities. And we know institutions over the last 6 months have been doing a lot of buying in a lot of Chinese securities, especially as of recently when China did announce they will stop cracking down on their companies as much. You've seen a lot of capital flow into Chinese securities. And what has happened specifically in the past with this executive order was literally the peaks to all of these rallies, right? The executive order got implemented May 27th. AMC stock ran 35.5%. And then it got retracted, aka hedge funds could use Chinese securities as collateral. And then that was the peak. We went up 95.22% June 2nd. Next day, that actually went into effect, and it was pretty much downhill ever since then. Same thing happened back here in January. Same exact scenario played out. But what essentially happened before that executive order went into effect was AMC went from $8.31 per share on April 13th. And then ultimately, by the time it did go into effect, or the day before it went into effect, the stock was trading at about $18. So you've seen 150% rally in the weeks prior to the executive order. So if the executive order goes into effect June 2nd, June 3rd again, starting out Monday, it's going to be what? The 23rd? So you'll only have like 10 days, like 7 or 8 trading days before the executive order actually goes into effect. So I would expect to see a rally that does start to play out. It's not going to be super violent. It's going to be, 10, 15% positive days in my opinion. But if you can string together a lot of those positive days like we did back here, and the price can consistently go up, and then you see the big catalyst come, the executive order, and then you see 100 or 200% day, that's the difference from the stock trading at 35 and going to 75 in a day. That's what happened back in June. Or if the stock trades at 40 and sees a 100% day, boom, you're trading at 80, or a 200% day, boom, you're trading over 100, right? So you guys get the idea here. That's what has happened twice in the past. I don't think now will be any different. And as far as the Ortex data, it looks like the markets and hedge funds are certainly preparing for that. As you can see, the positive order value on Friday, you see 9 orders totaling $8.16 million, positive order value of 97%. Look at these options that are coming through. December 16th, $35 strike, about $70,000 put on that call option. January 20th, 2023, 145 call. Bought for $97 a piece, $43,000 trade. Now, hedge funds typically don't go that far out the money. They typically do not do that unless they expect a really, really big move. Seeing a September 16th, $20 call going through for about $32,000. May 27th, $12.50 call for about $27,000. January 19th, 2024, $50 call going through for about $207,000. So I mean, that's like 5x out the money, right? 4x out the money if the stock's trading at $12. So that is expecting a really big move here in the near term future. Hedge funds do not typically buy options that far out of the money, no matter how much time you're getting. And in the grand scope of things, a January 2023 option, you only have like 7 months left for the end of the year. Really almost 6 months left until this thing will expire worthless. And you are betting the stock is going to over 10x by then. That's something to pay attention to. Very, very much so. Theta will start to kill this option in 3 months from now. It's already going to start killing this option, but in 3 months, this option will start to dramatically go down in value. So this is a big short-term bet on a massive short-term bet on AMC stock. It's absolutely incredible to be seeing that. At the same time, you do have the short interest that is continuing to climb. You're looking at 22.07% short interest of free float, 113.77 million shares that are sold short, cost of our max of 4.33%, utilization of 100%, and the shares on loan is now at a record high at 159.86 million. So there is a lot of shares out on loan. Over the past 7 days, you have seen a 4% increase to the shares out on loan. So even if the short interest is 22%, the potential short interest here could be well over 30% or 35% if these hedge funds do decide to short the stock into the ground. They might not. They might use these shares to actually cover on their short positions. They could do a lot with shares out on loan. There's multiple things they could do. They could lend out the shares themselves to somebody else, and they could, short them, whatever the case is. But you're looking at a lot of short interest nonetheless. And you're seeing liquidity levels, I've talked about this many of times, that are at their record lowest points that we have seen in a very long time. Equity markets in total have lost about $11 trillion in 6 months. You don't have as much money to actually service a margin call. And if you can't use Chinese securities as collateral at the same time, that's not going to be such a good situation. We'll just put it like that. You could see a very parabolic rally here in the next, say, 2 to 3 weeks. But I do think it will start this upcoming week. Now, let's talk about what we do have as far as news for this week, because I think that's very important to point out. And this could be good for the overall markets, considering we have priced in already a lot of bad news. So if it's like, right, it's like, for an example, you think your girlfriend's about to break up with you, right? And you really think that. So when she does, it's like, I already expected this. Okay, right? It's not as much as of a blind side. You were pricing it in. You were expecting it. Same thing with economic data. Same thing with the Fed. Same thing with everything else. If the markets are already expecting, the Fed to be bad, they're already expecting data to be bad, then it's not as bad when you actually get the news. Right? But on Monday, you do have Fed Bostic that speaks at 11 a.m. On Tuesday, you do have some Europe data, but you do have new home sales APR. You do have a couple other Fed speakers. You have Fed Powell that speaks at 11:20 a.m. on Tuesday as well. And then on Wednesday, that's going to be the big day. You have durable good orders. That's going to be very important for, obviously, retail things, right? Durable good orders goes without saying. FOMC minutes, that's going to be the most important data point of this next upcoming week. Essentially, the last meeting, the 2 days before, Fed Jerome Powell came out on his podium, and you've seen that wild recovery right after, about 3% positive in the markets, and then the next day we dropped like 5% on the NASDAQ. The 2 days before that was the last Fed meeting, and what is said at that Fed meeting actually comes out during the FOMC minutes, and it kind of projects what's going to happen at the next meeting and what they are looking at, in terms of the economy, if they're getting on the right course, if they're going to have to go more aggressive, or potentially if this is aggressive enough. We're going to get a lot of clarity on that coming Wednesday at 1 p.m. And before that, at 11:15 a.m., you have Fed Brainerd that does speak. So this report will come out at 2 p.m. and you will see the markets, or it actually says 1 p.m. I believe Eastern time, it's 2 p.m. I could be wrong there, but I believe it's 2 p.m. Eastern time. This might be Central time, where it is behind by 1 hour. But nonetheless, it's going to be very important. It's going to move the markets in a very dramatic way, and I think it could be a sigh of relief to a lot of market participants, considering how much bad news we have already priced in. Now, 7:30 a.m. coming on Thursday, you have GDP growth rate quarter over quarter for the second quarter. So if this is bad, you could go into a technical recession. I don't necessarily think that we will, given why we had a negative GDP report last quarter was really due to inventories and supply issues, which, that could happen again, could put us into a technical recession. But at this point, the NASDAQ is down 30% in 6 months. You're expecting a recession. So anything less than that is going to be very, very positive. And I think GDP and potentially the Fed minutes could really send the markets into a very big rally. Now on Friday, you do have personal income month over month, personal spending month over month. That will be very important for the prospects of a recession. If that is good, that could be very good for the markets. Basically, anything that is positive could be like very positive. Even if you would think it was a small bullish thing, like it's not like, wow, the Fed is pivoting here, wow, things are going to go back to normal. Even if it's not quite that level of good, you could still see a massive good market reaction because we just haven't had any good news in a very long time. So that could be pretty promising. PCE price index month over month and PCE price index year over year, that's going to come out at 7:30 in the morning Friday as well, and that could move the markets in a substantial way because that's how the Fed really looks at inflation. That's one of their favorite things to actually gauge inflation. So we do got a lot of very important data. I'm not going to sit here and forecast what I think will be good or bad, but I do think you will get some level of good news out of that. And considering the markets are already pricing in recession, energy price so high, World War III, China lockdowns forever, things like that, it's not going to take a lot to massively rally the markets, especially a lot of stocks that we are invested in that are down 60, 70, 80% in the last 6 months. It's not going to be hard to get a 10 to 30% rally out of those stocks in the coming week and to potentially drive the markets back to the upside. So that is basically going to be all for this video. That is what you guys need to know. If you guys found value out of this video, hit that like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Get yourself those free stocks with Webull, Moomoo, and Public. I'm telling you, if you have not signed up for all three of those, $200, deposit $100 into Webull, $100 into Public. You also help to support the channel because I get a free stock every time you guys do that, and free money is free money, so you guys definitely want to go ahead and check that out if you have not already. Public, you only have to deposit $1, so that is pretty easy to be a part of as well. Public is actually a very nice brokerage too. It's very simple to use. They don't have options or anything, but it's so clean. I personally like it, and I personally have a couple $1,000s over there as well. So that is going to be it. If you guys want access to all of my trades in real time, link down below in the pinned comment as well. But you guys enjoy your weekend. You sure as hell deserve it. Kick back, have a drink, have a bonfire, go to the park, do what you guys want to do. Go fishing. Fishing sounds really nice actually right now. But yeah, you guys just enjoy your weekend. Get ready for next week. It's going to be very exciting, potentially very heartbreaking if you have trades the downside, or it could be good to the upside. That's basically it in a nutshell. So thank you guys for watching, and I will see you in the next one.